everyone, good evening. You're watching The Money Show on ET Now. I'm Ubina Kapasi and we are going to be talking about how to manage your finances amidst these turbulent times with the coronavirus keeping us at our homes. Many of us, unfortunately, have not been able to really get that usual income going, our regular income going, especially if you're freelancing. I'm sure you've had some payment and cash flow problems. Well, fret not. We are going to tell you about how you can tide through these difficult times. The finance minister as well has allowed you to tap into your provident fund. But does that mean you should do that? Break into your retirement kitty? We'll be talking about how you can bridge the gap that you may find between your incomes and expenses. And of course, very quickly answering any questions or queries you guys may be having on mutual funds. Also, later on the show, we'll be talking about insurance. Yes, the government has said that, you know what, I'm going to allow you till the 21st of April to renew your, your health and life insurance, but it looks like it does not apply to motor insurance. And also, we'll be talking about how the Sanjeevani Arogya plan does cover coronavirus. So, action-packed day. I hope you guys have kept any questions or queries as well ready. We will be getting them answered. Today I have with me Mr. Anil Rego of Right Horizons joining us. Mr. Rego, thanks so much for joining in. I hope you, your family, your team are all keeping safe and I'm sure you're staying put at home as well. Mr. Rego, let's start off first with that basic difficulty that I'm sure everyone must be facing, and that's with respect to managing finances. Unfortunately, especially if one is a businessman or a businesswoman, they could feel that pinch coming in because maybe orders are not coming in, or even if orders have come in, their clients may not be paying them, so on and so forth. How do you recommend individuals really tackle with such a crisis?
No, I think this is a good time to also step back, right, and assess where you are, irrespective of maybe what is your financial condition. You also have time on your hands right now, right? So what I would think that somebody needs to do at a time like this is to actually reassess, and the best thing would be if you can execute a financial plan, either use an advisor who can do that for you, or if you are able to do it on your own, that is something that also you can end up doing. As part of that, maybe 2-3 areas which I think you need to keep in mind a little more at this point of time is one is on your life and health cover. Okay, so that's an important aspect right now, and it's good to have sufficient life and health cover, and it's a good time to go about and do it. The good part is many of the insurance companies also have tried to make it easier in terms of not having medicals as far as possible and stuff. And if you have old reports, you can submit them wherever it's applicable. So that is something that you can end up doing. It's important to and right now the situation as well. Health has become priority. So it's a good time to also reassess. Most probably, and I'm hoping that you don't need to use it, but still it's a good thing to do for the long term. The second is about at a time like this, like you mentioned, yes, the businesses are struggling. If you are a business owner, then you have a bit of a problem because operations for many of us are sort of gone to a standstill. Even if you're salaried, I think there are impacts that are coming, and we are hearing from clients that a few of them are actually getting salary cuts, and some of them very steep. So it's important to step back and say, do I have a sufficient emergency fund? And that emergency fund is required to sort of safeguard yourself. So go back, look at your finances, saying that do I have at least 6 months of liquid assets available? You can layer it and have maybe something beyond 6 months as well in not so liquid type of avenues. You can live with it, but maybe it's important to assess that. Also, some of us may have an inkling as to whether we are going to be impacted, not impacted. Especially if we are going to be, and we think that we are going to be impacted, then also it's very important to do this exercise. The third is about relooking at your whole financial portfolio itself. This is a time to go back and review it. Markets have fallen almost, like if you see from the peak to the low, 39%, and a very sharp one. So this could be a time to relook and say, where is my asset allocation? If I have sufficient debt, then this may be a good time to sort of phase in some investments into equity. But if I don't have, I also can look back at the funds that I have, etc. And anything that are a point of concern, one can sort of review. So I think these three significant things, if as part of the overall financial planning, and even better if you actually go and execute a full-fledged financial planning and do a comprehensive exercise.
Okay. All right. Mr. Rego, I just want to talk a bit more on that point number 2. Like you mentioned, just check into your bank account, see if you have adequate expenses, for the next, adequate amount for the next 6 months of expenses. But now what if, some of our viewers may not be having that. They may not have created that emergency nest, which we have time and again, of course, explained as well on the Money Show, how you must keep 6 months of your expenses away for rainy days like the one that we are currently in the midst of. So in such a situation, how would you, of course, they are going to be cutting back on their lifestyle, that goes without saying. But then, the FM has said, look, you can use your provident fund. Would you recommend they do that, dip into their, their retirement kitty?
So I would think that ideally, that's the last thing that you should do. But, push comes to shove when you have to take care of today and, maybe you have not been able to keep sufficient liquidity for yourself. Okay, that is something that I think you can do. But I think because it is tax-free, because it's one of the highest debt returns that is available right now at 8.5%, if you can afford it, you should not be using it. There are other things like also, the holiday that you take or you postpone your EMIs. That's the other thing that you can sort of look at. So you need to start also assessing that, is there money stashed away somewhere else? Okay, can I even, do I have facilities on my, to take let's say a personal loan, or do I have some, loan that I can take? Those are things that maybe you just take an overdraft facility and keep it ready and not necessarily use it. But at a time like this, rather than, at a later date struggling, I think it's time to start looking at it. And even you may not be able to action it out right now, go back and, do that after a few days. One other thing that I think is important for people to look at is their home loans, right? So home loans is another aspect where maybe interest rates have sort of come down. The bank has not passed it to you. So this is a point where you can just go back and, look at it and possibly do it. So all of these PPF, home loans, looking for wherever you can, I think they are important things to look at if you are in a bit of a crisis.
Okay, all right. Well, you know what? I want to take this opportunity also to take forward your third recommendation in the previous answer, and that's giving your finances a relook. Folks, you're all staying at home, you're quarantined. Now is the best time to make a productive use of this free time that you have in your hands and look at your portfolio. And of course, we on the Money Show are here to help you out with cleaning out and smoothing out any kinks in your mutual fund portfolio. We've already got a whole host of viewer queries, so I'm going to take on board our first email query. Rohan Bilani has written into us saying, I'm currently investing 12,500 per month in mutual funds via SIP. So he has funds like the Mirae Asset, Emerging Blue Chip, Axis Midcap, IDFC Sterling Value Fund. And he also says he's 27 years old, so he's quite young. He's looking for long-term investment, but his risk profile is low. I wonder why that is. Now he says, are these funds which I'm investing in suitable for me, or should I change? If yes, then if you could suggest funds to invest in, I can invest around 5,000 more in SIPs. And also that key question, is this a good time to stay put or increase investments? Mr. Rego?
Yeah, so it's a little puzzling that he says, I'm a, lower risk profile. So that is something that, I think he could go to a financial advisor, actually do a proper risk profiler and, then understand, should he be taking a low risk or not. But let us assume that, he wants to take a low risk, and that means that there are some actions that he needs to take on his portfolio because all the investments that he's spoken about are all equity funds. Right, so I think Mirae Emerging Blue Chip is a good fund, so he can continue to invest in that. Axis Midcap also is one of the best in class, so that also can continue. Maybe IDFC Sterling Value Fund is something that he can, review there. And because of his lower risk profile, maybe he can invest into a dynamic asset allocation fund. Okay, typically I wouldn't suggest this For most people, who can take a higher risk, but for somebody who wants to take a lower risk, then this is a good option to use, because as the markets go up, it automatically goes into debt in terms of the balance ratio between debt and equity, and as markets fall, it goes back into equity, so it manages risk better. So this is a fund that maybe is a sort of an intermediate that he can look at. Considering that he again wants to reduce risk, maybe one thing that he can do to counterbalance his portfolio is possibly do an SIP partially into put a gold fund or any other ETFs also he can look at, and maybe he can do something like a 2,500 rupees or so of SIP into that. He can build up some liquidity for himself. I'm not aware again, does he have sufficient liquidity or does he not have sufficient liquidity, but he can build up something in let's say an ultra short term or even an HDFC short term, one of those funds that if he want, he's okay with keeping for let's say over 6 months, then he can 6 months to 1 year, then he can say do HDFC short term. But if you want to just keep some bit of emergency fund and build it up, with even short term requirements, then you can do a liquid or an ultra short term fund. So broadly, I think ideally at this time he should have been increasing his contribution into equity. So let him reassess that, and if he can actually do that, then one could also supplement it with, and he has sufficient liquidity, then he can maybe do that 2,500 rupees which we are putting into a debt fund. We can do it maybe into a large cap fund. So I think that's broadly what he can do at this point of time.
Okay, great. Well, on that note, we will try and of course take up more questions in the ensuing days, but thank you, Mr. Rego, for joining in. Folks, I know you've been sending in your questions and queries. Don't worry, we will be able to sort of take these questions and get them answered tomorrow and on Monday as well. Thanks, Mr. Rego, once again.